Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. Well, it's been a steady day of trade, for us. We did start on a shaky note, but soon after we recovered all the losses, and in fact, the Nifty came very close to that 23,300 level, although we weren't really able to conquer that level just yet. 23,270, that was the high point of the day, but we've cooled off from there a bit, but still holding on to that 23,200 mark. But good recovery coming in the broader end of the market, right? Look at the Nifty Midcap Index, almost 2% higher. Yesterday, we saw a 1.5% cut in the broader market, although the headline index managed to recover from the day's low and ended with a good triple-digit up move. But the mid-cap index and the small-cap index, they continue to see selling pressure. They did trim some of the losses, but ended the day with losses of somewhere around 1.5%. And today we have recovered all of those yesterday's losses. Good breadth as well. Look at the NSE advance decline ratio, 1400 stocks advancing to 1000 stocks declining. So it's 1.5, 3:2. You can call that the NSE advance decline ratio. What's leading from the front is the IT pack. Yesterday as well, the IT pack was leading from the front. Today as well, IT extending gains, and you also have Pharma that's doing well. But it's the cement pack that's fairly active, and that too particularly after Ultratech cement numbers. Numbers have been an all-round beat. Have topped expectations, and the stock is up 7% or so. Top Nifty gainer at the current juncture, and has taken other cement stocks higher along with itself, barring say an India Cements, which was under pressure, which has been under pressure ever since it reported its numbers. But Ultratech Cement, Grasim, these are some of the top movers on the index. IT names like Wipro, among gainers, and look at some of the other movers like Sun Pharma. You also have Trent that has managed to snap out of its losing streak. A 2% gain coming in on Trent. I think for 2025 year to date, this is one of the worst performing stocks now, Trent, after being one of the best performers in 2024. But today it has managed to break out of that losing streak. Tata Consumer, Tata Steel, some of the other gainers. You also have Tata Motors, Titan, JSW Steel, some of the FMCG names doing well, although HUL did see some bit of a reaction to its numbers, muted expectations, volume growth very flat, and commentary on demand also not all that encouraging, because the softness in urban consumption demand, that is expected to linger on for some more time. But on the flip side, look at BPCL, that's the top Nifty laggard, although crude has cooled off slightly, in fact below that $79 per barrel mark. But number wise, earnings wise, BPCL was a disappointment, and gross refining margins were also below estimates, and which is why I think the stock is reacting, and it's among the top laggards on the Nifty. Banking names, they did see some bit of a spurt during the intraday session. But Nifty Bank Index is back in the red, and we're just about under that 48,600 mark. 140 point cut coming in on the Nifty Bank Index. So you have some of the banking names like Kotak Mahindra Bank, Axis Bank, even HDFC Bank for that matter. All of them are in the red. SBI from the PSU banking pack is also in the red, and the PSU banking index is trading with losses. Aside of that, we had L&T, news based movement. We'll talk about the news and do a chart check also on this particular name. Dr. Reddy's also numbers coming out, so that stock is under pressure ahead of that. But the pharma pack per se is buoyant, up and about. The pharma pack, as I speak, is up by 1.5% or thereabouts. So all in all, a good day of trade. But some of the reactions on stocks are mostly on the back of earnings or news flow. Weekly expiry today, so no reason to complain really, and especially since broader markets have staged a good rebound. But on that note, let me bring on board our guest for today. Joining me is Nilesh Jain of Centrum Broking. Nilesh, great to have you on the show this afternoon. Just about 5 minutes, in fact 2-3 minutes to go for the market close. Since we are talking to each other before the market close, I would like to ask you if you have any buy today, sell tomorrow kind of strategy for us.
Right. So as you mentioned just now that the cement pack is in focus. So within cement pack, Grasim is something that is looking attractive.
Nilesh, are you on mute? Because we can't really hear you.
Am I audible now?
Yes, you are.
Nandita,
please go on.
Yes, so I was talking about the cement pack as a
Yes, yes,
whole,
we can hear you.
where we have seen a strong rebound today. So within cement pack, Grasim is something that is looking attractive. We have witnessed good build up on the long side, and today's price and volume breakout. Looking at that, I think it can be a good BTST trade for further upside towards 2500 to 2550 with a stop loss below 2400. Grasim is something that can be bought at current level. And apart from that, the another stock within the fertilizer space is Chambal Fertilizers. This particular stock is also looking good at current level. We have seen a sort of a short covering rally today, and we can expect a follow-up move in the coming session towards 518 to 525. So these are the levels on the upside one can watch out for. With a stop loss below 501, Chambal Fertilizer is another stock that is looking attractive as a BTST trade.
Hmm. Okay, Grasim, Chambal Fertilizer, these two names, and I think just about seconds to go for the markets to shut. But looking at today's up move and that too on weekly expiry day, your thoughts as to how we are going to end the week, and next week, of course, we have the budget coming up, and we have an extra session as well on Saturday. So, how's the setup looking like? Are we going to be volatile? Is it a good time to get out of stuck positions on these up moves?
Well, Nanta, if you see in last few weeks now, the markets have been in a gradual declining phase. Although in last two sessions we have seen some rebound from the lower levels. The good part of this rebound is that Nifty has found support as its 23,000 mark that is acting as a psychological support. And even if you look at the derivative data of the monthly of an expiry, 23,000 strike on the put side is still acting as a likely to provide meaningful support where good OI concentration can be seen. So overall, looking at the setup, the immediate narrow range looks like 23,000 to 23,400. That's the 400-point trading range for the Nifty as of now. Whichever side it will break, we can expect another 200 to 300-point move in that particular direction. But overall, the markets are little oversold zone. And looking at the RSI as well, it is basically hinting at a strong pullback rally. So pullback may extend further towards 23,500, 23,800. So I would wait for a decisive breakout to come in before taking any aggressive long position. Till then, it is better to stay away from the market, specifically from the index, and focus should be on stocks and sectors. Since we have seen a good rebound and good momentum in few sectors, defensives are in focus. So yes, it's time to focus on stocks. Till the time the major event is not out of the way, it is better to stay cautious. The IVs are trading at almost at highest level, elevated level of 16.74 now. It needs to cool off below 15 for bulls to regain the control. But as of now, in this kind of extremely volatile market, it is advisable to stick to the stocks and sector specific move.
Sure, stick to stock and sector specific moves, and of course avoid any aggressive longs till you get a decisive trend emerging. And would 23,300 on a closing basis act as a crucial resistance zone or support zone rather? If you look at the higher support zones, I mean, you mentioned 23,500 on the upside. Would that be possible only once we close above 23,300 on on a decisive note?
Nanta, so on 21st of January, we saw, in fact, on Tuesday, we saw a big bearish candle. So it is important now to take out the highs of that particular candle, which is currently placed at 23,400, and low of that particular candle is somewhere around 23,000. So looking at the setup, 23,000 to 23,400, that's the very tight range of 400 point. As I mentioned, whichever side it will break, we can expect a further up move or down take in that particular direction. So 23,400 is the strike where we have seen huge amount of call writing. If at all it sustains about 23,400, then the next target would be 23,800 to 24,000. And the probability is very high of taking out that level in the coming week. Ahead of the budget, we may see a kind of a pre-budget up move. And given the kind of structure, the markets are slightly in the oversold territory. So a dead cat bounce is something that we are expecting. 23,000 should be the stop loss on the closing basis on the lower side. As long as it trades above 23,000, the probability of breaking out on the upside is very high.
Okay, that would be like music. It comes as a music to the ears. 23,800, 24,000. That too ahead of budget. So next week becomes extremely crucial. But let's talk about if our markets have shut shop for the day and we have closed above that 23,200 mark. Barely so, but 23,205. That's where we've shut shop for the day. Mid-cap index also almost 2% gains, but I want to point out some of the gainers on the Nifty 500 index and mid-cap IT. That was the flavor of the day, right? Look at the likes of Coforge, Persistent, Zensar, in excess of 10%, all three of them. Great set of numbers for Persistent, beat meet on all parameters, but in terms of CC revenue growth, it was a clear beat, and so goes for Coforge as well, where they've also announced a new acquisition. The recent acquisition of Signity Tech, that also reported numbers and has been fairly good in terms of CC revenue growth. These stocks over the last month or so have come under some bit of a selling pressure, but the stocks have been doing phenomenally well if you look at the last year, particularly for the likes of Persistent. I think that was the best performing stock for 2024. Do you see the chances of further breakout after today's move, or would you expect a cool off? And would you call today just a one-off result reaction?
So Nandita, we have seen a stellar performance from the mid-cap and small-cap ITs earlier, and now recently we have seen some cool off from the highs. But I think it is good time to be into the mid-cap ITs where Persistent, Coforge, Birlasoft, and also Emphasis. These are the stocks. It's good time to accumulate. I think the fresh move has just begun, given the kind of numbers that we have seen. I think the next leg of rally have just started. It is not advisable to chase after a spot of 10 to 15%. It is better to accumulate these type of stocks on declines. Nifty IT index, if you look at this particular index, given the kind of volatility in the market, the focus is shifting toward defensive. So Nifty IT index looks like heading towards 44,000 to 44,500. Not only mid and small cap, but also large cap IT names like TCS, Infosys, and SL Tech, and also Wipro. So these are the stocks that are showing strength, and we expect this momentum to continue, at least from a short-term point of view. So watch out for Coforge, where we expect this particular counter to move towards 9,500 to 9,600 from a short-term point of view. With a stop loss below 8,700, it can be bought, but advisable to buy on declines. Persistent system, again, a similar approach should be adopted here. One should ideally buy in the range of 5,900 to 6,000 for upside target of 6,500 to 6,700. Stop loss can be placed somewhere around 5,700.
Okay, that's the view, and of course, mid-cap IT and IT defensive. That seems to be the flavor now. But let's talk about you mentioned cement. When you were talking about your BTST strategies, but Ultratech Cement. That's the one that pulled the entire cement pack up with itself. A good set of numbers, although profit was down on a YY basis, but it was better than what the street was expecting. Margins also on a YY basis have come down to 17% from 19.5% odd, but expectations were somewhere around 16% or so. So it has beaten expectations, and the company has also indicated that it will generate a sustainable volume growth of 7 to 8% and will achieve milestone of over 200 million tons per annum cement capacity by FY27 end. Domestic sales volume growth came in at 10% on a YY basis. That's higher at the higher end of the expectations as well. Looking at the stock, it's been up 5% or so in the last 3 months and did well in a volatile week. If you look at the last week performance as well. As we step into the budget, would you be playing the capex theme via some of these cement names? And if yes, would it be the larger names like Ultratech? You already mentioned Grasim, that's also a large cap. So your thoughts as we step into the budget, if you zoom out a bit, would you take a bet or would you take a position in some of these cement names aside of the other stocks that you mentioned at the start?
Absolutely, Nandita. So first of all, Ultratech Cement, if you just pull up 8 to 10 months chart of this particular counter, we can see at 10,500 a triple bottom has been formed. Similarly, a triple top formation is formed at 12,000 mark. So that's precisely a copybook style rectangle formation can be seen in this particular counter, where it is trading in the range of 10,500 to 12,000. So yes, at current level and also on declines, it is advisable to buy Ultratech Cement for upside target of 12,000 from a very short-term point of view. But looking at the overall structure, if at all it breaks out from 12,000 range, I think the next target would be 12,800 to 13,000. So overall, this particular counter within cement pack is also looking attractive. It has reclaimed its 200 EMA as well as all these short-term moving averages as well. So yes, buy and decline should be the approach here. And cement as a pack, I think, is advisable to look at from a short to medium term point of view. We are pretty bullish on a cement pack. Looking at the budget ahead of that, also from a positional point of view, we are very much bullish on cement pack. So apart from Grasim, Ultratech, another cement counter that is looking positive to me is Ambuja Cement. So within Adani Group, this is one particular counter that we are bullish on, and the target on the upside could be somewhere around 575 to 600. With a stop loss below 525, Ambuja Cement can also be looked at.
Okay, cement a clear play ahead of the budget, but how would you play the realty pack? The index per se is down in excess of 15%. If you look at the month to date performance, in the correction zone, stocks like DLF, Oberoi Realty, they've corrected 15 to 20%, this year so far, 2025. Of course, there are signs of slowdown and, slowdown in capex spend as well. By the government, that being an election year, which is expected to pick up. But is this a good time to get into realty, given the fact that they have seen a very good correction from their all-time highs?
So Nanta, as you have rightly pointed out, close to 17% correction we have seen in this month itself in the January series so far. And I think after a sharp run-up that we have seen earlier, the run-up that was started from the month of March 23 to almost a year of a run-up that we have seen. So this is a kind of retracement that usually we see after a stellar performance in realty pack. And this consolidation seems to be continuing from here. As far as Nifty Realty Index is concerned, it has a support somewhere around 830 and resistance is placed at 950. So that's the zone as of now for the Nifty Realty Index. As of now, from a short-term point of view, it's an avoid and better to wait and watch out for some positive development on the chart. And if somebody is looking from a positional point of view, then yes, it's good time to start accumulating quality names like Oberoi Realty. That particular stock we are bullish on within Nifty Realty Pack. So can be added on declines. Buying is advisable up to 1700. Upside target would be somewhere around 2025 with a stop loss below 1650. Oberoi Realty is something that is looking positive. Apart from that, if you look at the DLF structure, which has been showing a constant decline, has now approached and reached to its multi-month lowest level support of 680. So if somebody is already holding the long position in DLF, then one should keep a stop loss below 680 and stay put for a pullback. At least pullback can be played in this particular counter towards 760.
Okay, that's the view. Overall realty looking good from the realty space, but otherwise, the sector per se is an avoid at the current juncture. But, last question really, Nilesh, running out of time. What do you do with some of these, quick commerce, new age companies? A fair bit of correction on stocks like Zomato, even Paytm that reported numbers. Swiggy also, it came down. Today, we saw some bit of recovery. But if you look at the performance so far in 2025, it's been a very, very rough ride. Would this space also be an avoid, given the fact that there are quite a few fundamental reasons? Quick commerce business, loss making because a lot of growth capital going there and margins could be under pressure. So these factors have been pointed out by experts. But in the very near to term, as a trading play, would you avoid? Would you look at it? How would you really approach this space?
So Nandita, the newest stock e-commerce counter that you have just pointed out. So we are doing little pick and choose in this particular space. So a couple of stocks that are looking attractive after the sharp decline that we have seen. Purely from a risk and reward point of view, Zomato is something that is looking attractive. But in this kind of extreme volatile market where one should strictly adhere to stop losses. So as of now, for Zomato, the stop loss is coming somewhere around 203. So ideally, that should be the stop loss for the long position. We can expect a kind of a pullback since we are expecting a pullback rally in the market. So Zomato may witness some pullback towards 230 to 240. So that can be played with a stop loss below 203. Apart from that, Nykaa is another stock that is also looking attractive purely from a risk and reward point of view. With a stop loss below 163, it can be bought for a target of 178 to 180. And apart from that, if you just look at Paytm, this particular counter has also witnessed a cool off from the highs after making highs near about 1050. Currently, it is trading at 850. The recent swing low that it has made of 800. So that should be the stop loss for the long. And we may see pullback towards 900 to 950. So these are high risk trades, only advisable for a trader who can follow strict stop losses. Not advisable to buy from a position point of view since the structure is not looking attractive. Purely from a short term pullback perspective, yes, these stocks can be bought.
Got your point. And very quickly, do you expect this momentum to continue into tomorrow as well? We have seen a second day of gains, at least on the headline indices front. Would you expect a positive start tomorrow?
Absolutely. So the only concern today we have was from the bank Nifty. Otherwise, the overall market bet was looking quite positive. Nifty sustained well above 23,200. So it's a good close to me. And I would consider it as a buy. And stop loss is coming somewhere around 23,100. A close about 23,200 was needed. And it has given a good close. So we can expect a follow-up move in the coming session towards 23,300 to 23,350. And as far as Bank Nifty is concerned, where we have seen some sluggish move today, it remained choppy throughout the session. It is constantly facing resistance at it 49,000 mark. So it is important for the Bank Nifty to cross 49,000, and then we might see a short covering rally towards 49,500 to 49,800. So overall, purely from a short to medium term perspective, I think these are good opportunities to accumulate quality stocks. Index we are avoiding basically because looking at the extreme volatility we have seen in this week and in the previous week, so it is not advisable to trade in the index. But yes, overall market sentiment wise are looking very attractive given a kind of risk and reward at current level.
All right, that's the view. We can expect this up move to continue tomorrow as well. With that, Nilesh, thanks a lot for taking out time and sharing your insights with us. Always a pleasure, and I look forward to interacting with you again sometime soon.
Thank you, Nandita.
Thank you. Well, with that, we've come to the end of this edition of Closing Bell. Positive close to the day. It was the expiry day, weekly expiry day, and we managed to end the day in the positive zone above that 24,200 mark. And as we just heard Nilesh, the momentum is expected to continue into tomorrow as well. But thanks a lot then. On that note, it's time to say goodbye. Thank you for tuning in, but stay tuned to Money Control for all your other news and updates, and we'll be back with the markets tomorrow morning. Thank you.